Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 23rd through October 27th, where we'll try to help you skate to where the market is going. The title was inspired by the famous quote by the great hockey player Wayne Gretzky, who said, "I skate to where the puck is going to be, not where the puck has been." And again, we want to try to learn and help you skate to where the market is going so we can get there, make money, make our goals when the puck arrives there or when the market arrives there. So let's get started. Welcome, Walter Lyons, to Ricky Kahn. Thank you for joining us in the live chat today. Hope you all have been doing well. So here's our Google document with our notes for part one of our weekly trading plan for this week of October 23rd through October 27th. We keep our notes in publicly accessible Google documents, so you can refer back to these notes. We also have links to bonus videos, the tools and resources we use for our market analysis, our strategies, our trade ideas, etc., in our notes documents. We store all the notes documents for our weekly trading game plans in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weeks in that Google Drive folder, and you can find a direct link to that Google Drive folder also in the description box below. So we'll start out and we'll look at how the markets ended up on Friday in FinViz. So I've got FinViz already open. We can see the markets had a rough week. All the indices were down about 1%, Dow down 0.86%, NASDAQ, the biggest loser on Friday, down 1.53%, and the S&P about 1.26% down. So again, a major down day on Friday. Generally, the rough week, down week. We see only 24% advancers, 71% decliners, only 3% new highs, 97% new lows, only 18% above their 50-day moving average, 82% below, and only about 25% above their 200-day and 75% below. So again, all very bearish signals. And again, we saw general decline throughout the day. We see in the heat map, even the Magnificent Seven, the mega cap techs, took a big hit, probably again profit taking. And there were very, very few greens, a few in the healthcare sector, but generally a pretty bloody Friday. So news, Dow closes 300 points after 10 years above 5%. So we'll talk about the Treasury yields. TLT, 10-year Treasury popping up above 5%. Again, major headwinds for all your growth stocks, etc., for your TINA trades. We saw oil pop above 90 at one point. So we'll see oil's range bound right now between 85 and 90. Again, a lot of strength in oil due to the conflicts in the Middle East that we've talked about. Natural gas broke down below 3, so we'll see in the futures it's about range bound between about 280 and 3. So we'll see if it regains that 3. We saw gold break above 2,000 briefly, and then retreat a little bit. So again, we'll see if gold can recapture that 2,000 and hold that 2,000 level. See, all the futures on the indices are pointing down pretty severely. Again, we saw the 10-year Treasury, I think it was on Thursday, popped above 5% very briefly. We also see the curve is de-inverting, which is positive in terms of signs of recession. But again, higher yields. We've been talking for a long time that we expected Treasury yields to go above 5% to compete with the Fed interest rate. And we finally saw that surge. And I guess it surged like 20-some basis points this week. So major surge in Treasury yields. Again, headwind for growth stocks. Welcome, Easy Mike. Thank you for joining us. Hope you're doing well. So look at the groups and the sectors and the industries. Again, everything was pretty much red, the most negative technology. Again, growth stocks. Again, with the retreat in the Magnificent Seven, heavy weighted on both the S&P, the NASDAQ, and the technology sector. Utilities briefly had a pop up, was positive briefly. Real estate also was less affected. Again, a general flight to safety. We'll see silver and gold had a nice pop, but otherwise, generally, in healthcare was the least negative on Friday. For the week, energy, consumer, defensive. So again, very defensive week, flight to safety. Again, we saw utilities, gain some ground a little bit. The weakest were real estate, again, sensitive to the 10-year treasury yield, interest rates, etc. And then for the month, energy and communication services. Again, communication services has, been oscillating. And the weakest for the month was utilities. For the quarter, again, energy, positive, utilities, real estate, the most negative. So we'll look at the industries briefly. So again, from Friday, we just had some pharmaceuticals. Again, the pop in the healthcare sector. A little bit of trucking, auto, railroads, but mostly pretty negative. The most negative, solar. You heard Solar Edge came out with a warning, decreased demand, decreased guidance. Again, we've been talking about, solar for quite a while, staying away from that, sensitive to interest rates as people have to fund their solar projects. And with higher interest rates, that becomes less attractive. Saw some retreat in oil, natural gas, coal, so a little bit of a retreat in energy, copper, a little bit of a retreat, steel pretty negative. So for the week, uranium was positive, although if you look at the uranium stocks, they have bounced off their resistance and kind of downtrending. But in general, for the week, that was positive. Silver and gold, we'll see, had a nice pop and are trending upwards. Banks, negative. Again, some of the banks are starting to report, some of the regional banks, more concern about some of the regional banks with the higher bond yields might be underwater. REITs in general got pretty beaten up. Again, solar very negative, aluminum very negative. I think it was Alcoa again reported a loss. Steel negative. So for the month, positive is energy, silver, gold. Most negative, solar, airlines, some REITs, office REITs. Again, for the quarter, energy. So again, the theme, and we've been talking about this, about making money trading in the fall and October, etc. One of the primary themes is energy going into the fall, going into the winter. So silver for the quarter, again, was pretty negative. So we're seeing quite a rebound in gold and silver. And again, solar very negative for the quarter. So welcome, Alan Krantz. Thank you for joining us. Hope you're doing well. So I'll bring up the calendar for the economic data and investing.com. Then we'll look at some of the highlights that I noted for the week. Let me grab a quick drink, and we'll then look at the data from last week, talk about that, and we'll talk about data upcoming in the upcoming week. Just a quick reminder, as we go through this economic data, I try to capture the pertinent the important economic data and post it in the Surf the Markets channel in our Discord. I'll put the link up to our Discord in the banner. Also, you can find it in The description box below, our Discord is free to join. So again, I try to post the pertinent economic data as quickly as possible in the Surf the Markets channel in our Discord. So a great place to make sure you see the economic data as quickly as possible. Notably, Thursday, we got jobless claims. This was interesting. The continuing claims was a little bit higher than expected, but the initial was a little bit lower than expected, and the average is pretty steady. So fewer people losing jobs, but those that are still looking, that pool is increasing. So probably, has saturated the balance of jobs to seekers. We heard Powell talk, I think it was Thursday. Also, he seems relatively happy with the ratio of open jobs to job seekers. He said that it's come down from a ratio of 2 to about 1.4. So they're pretty pleased with the job market normalizing. Saw a little bit of the Fed, Philadelphia Fed manufacturing was pretty negative. Employment was positive. And then Friday was options expiration. We saw, increased volatility, and we'll see the impact of that as well as all the other events going on globally and in our government on the VIX. We'll look at what other economic data we got from last week. So again, manufacturing negative. The bond auctions, again, yields, pretty much skyrocketed up above 5. Bond auctions have been weak, will continue to be weak. The supply of bonds, Treasury keeps issuing bonds. So again, a lot of supply, less demand. Retail sales was surprisingly positive, more positive than expected. So the retail sales is stronger than expected. So again, shows consumer spending is stronger than expected. And again, something Powell commented on, that consumers resilient. They're not concerned too much about that. Industrial production more positive than expected. Got a lot of Fed speakers. We'll continue to have some Fed speakers throughout, I believe, this week until they hit their blackout period going into the Fed decision next week. Housing, again, weak. Crude oil inventories was down more than expected. Didn't really impact the oil price. Again, the global conflict in the Middle East driving oil prices, and they continue to drive up to 90. Mortgage rates, I saw at one point that it actually breached 8%. So again, mortgage rates much higher. So building permits down, new home starts down. Again, the home builders really can't keep subsidizing these higher mortgage rates, and so now new home sales are getting impacted. And it's going to be very detrimental to existing home sales. Gasoline inventories down. Again, we see bonds up. We talked about jobless claims. So again, existing home sales down 2%, much more than the previous. Existing home sales, it was a little bit better than expected, but down. Natural gas storage was up more than expected, and we did see a decline in natural gas price eventually. But the trend, as we'll see, is pretty much up. Got a lot of Fed speakers, and as we've seen, the trend in oil rigs slightly up. So now the trend in oil rig counts is up, which again, with oil prices, they're capitalizing on the higher oil prices. So I would expect that trend to continue on an upward trend. But you see it's not severe, so they're not, oversupplying, so we won't see a shock to the prices. So next week, let's see what we've got for economic data. Some global data. Again, I don't see a lot of Fed speakers. Maybe they've hit their blackout period. Mortgage data, housing data, again, probably going to be weak. typical oil, natural gas inventories. So we get jobless claims again on Thursday, durable goods orders, PCE prices, GDP. So we'll get a read on Q3 GDP on Thursday, and if that comes in, weaker than expected, that may cause some volatility. But I don't really expect that to be significantly weaker. You can see they're expecting 2.5, better than previous for Q3. Pending home sales, again PCE data, so get important inflationary data on Friday. Personal income expected to be flat, spending to decrease slightly. Okay, so we've got a little Fed speakers, and then we've got Michigan sentiment. And again, last time this did have an impact because the overall consumer sentiment was more negative, and their inflationary expectations was higher, although you can see there the expectation is for that to be pretty much flat, except for expectations. It's expected to decline. And again, we're now in the heart of earnings season. So we saw Netflix reported, and that was received positively. They're getting some new subscribers from clamping down on password sharing. Their ads, they're talking about an ad-supported tier. They're talking about raising prices, so that was received positively. That may cascade to some of your other streamers like Disney, etc., who are also following a similar trajectory. So and then we saw Tesla. Obviously, their was received very negatively. Big drop in Tesla. They missed their overall deliveries. Weaker demand in China, etc. So again, it's important to know who's reporting earnings and what impact that might have on your portfolio, stocks you're looking to buy in the same sector as those stocks. And again, we have a whole video on how to trade around earnings, so how to make money trading when earnings matter again. And as you can see, earnings very much matter at this point. Again, we'll get some regional banks. Any weakness in any of these regional banks will probably cause a negative trend in the financial sector, particularly the regional banks. So again, you can go through this whole list. You can see we've got just tons of earnings. So if anybody knows of an important one, there's Microsoft, Alphabet. So Tuesday, big day for the Magnificent Seven. If they miss or give negative guidance, that'll have a major impact on the market on Tuesday. Danaher, Medical, Semiconductors, Texas Instruments, GE, Manufacturing. So again, we're right in the heart of earnings season, and so it's important to keep an eye on who's reporting, what are they saying. Not only do they make or beat their estimates, but what is the guidance going forward. So again, very important, and you can go through this whole list, and we'll show you in Webull in a minute where you can find a short-term list. I neglected to look at the indices, so I'm going to jump back to the indices. I see people talking about the Qs, IWM, etc. So let me jump back to Webull, and we'll look at the charts for the indices. So the SPY. So again, we saw, that roll over. Looks like it, got resistance from that longer term trend line, rolled over, went down. Now it's bouncing off this longer term trend line, 200-day SMA. So again, this week, pretty negative. Didn't quite touch that weekly trend line. Got some room below the weekly or above the longer term weekly trend line. So again, a lot of volatility. And yes, Easy Mike was asking if we've got some more going down, and yes, the indications do appear that we may be going down further. Again, increased volatility, so chop. Look at the NASDAQ, the Qs. Again, it looks a little bit more stable on a weekly chart. It's got some, downside to touch the previous low, and some resistance at that shorter term time frame, and then lots of room below or above the longer term. So again, a lot more risk if it breaks this previous low. Potential significant downside in the Nasdaq. Look at the Dows. Again, a little more stable, choppy, highly volatile. It's kind of hugging that shorter term trend line. We'll see what, that low was a doji, looked like a capitulation. So we'll see if this previous low holds. But the Dow seems to be a little more stable, a little choppy, getting resistance from that shorter term trend line. IWM, the Russell, again very weak, downtrending. Again, when we get these flight to safety risk off, it's going to have a tendency to hit the Russell more severely. So we'll see. It looks like it made a new low, or is testing that previous low back from what is that? June, July, and June. So we'll see if those June and October lows hold. If not, again, significant potential downside to the Russell. Looks like it, tried to test the previous highs, trying to pop, but then downtrending from there. The VIX, we got a pop up over 20s. Let me zoom this guy back in. So it popped up over 20, sitting in the 21s. May have almost touched 22 at one point. And we see that upward trend. So again, increased volatility, increased concerns over the expanding war in the Middle East, the issues with our government, etc. And again, we would kind of expect that to the general trend of increased volatility to continue. We'll see if it can break 22. That seems to be a previous high. 22.10 was the high back in May. We'll see. It'll probably test that, bounce off, and retrace a little bit. Again, the VIX, has a tendency to retrace pretty quickly. But again, the trend in general is upward at this point. Okay, so we talked about the earnings calendar and investing.com. Just a quick reminder, the next FOMC meeting will be the end of the month. They'll report their decision November 1st. So now the expectations, you heard with the economic data that came out and all the Fed speakers, there's the probabilities are pretty much for a hold at this point for November. There's still a probability of a 25 basis point hike in December. Again, that will oscillate as we get further economic data, as further speakers talk, and we'll look at that when we get closer to that Fed meeting. Okay, let's look at the market screen in Webull real quick. So again, I'm using the online browser version of Webull. This is the market screen. We see the histogram of advancers and decliners. Again, many more decliners than advancers on Friday, although again, the percentage of decline was pretty small. So we had, and the percentage of advancers pretty small. This is interesting. We see a crossover of the NYSE and the NASDAQ, the inflows. So NASDAQ started out positive, NYSE started out less positive, and then towards the 10:30 hour or so, they crossed over. NASDAQ ended up with still a positive inflow, but much less than the NYSE. So NYSE had a major inflow at about 10:30 on Friday. So that's interesting. And that's the trend we've seen, but it looks like the NASDAQ did try to make a little bit of a pop early on. Again, as I mentioned, the earnings calendar here on the market screen in Webull is a easy way to see who's got earnings coming up in the very near term. So again, you can see as people are coming up and whether they're going to be reporting during market open or during market hours, before market open, after market close. So again, a great way to see who's coming up in the very near term and what impact that might have on stocks that you're watching. Look at the best performing industries for the week. Let me grab a quick drink. Just a quick reminder, if you're not already using Webull, you can see we use Webull for our market analysis, our due diligence, our majority of our trading. If you're not already using Webull, you can still get up to 12 free stocks by opening and funding an account. You can also get up to 5% interest on uninvested cash in your cash account. So again, we highly recommend Webull. Use it for the majority of our trading and much of our analysis. And if you'd use our affiliate link in the description box below, we'd appreciate it. And you'll also help support our BeachBum trading community, which we also greatly appreciate. So again, if we go back and we look at the best performing industries on the market screen in Webull, see uranium was generally positive. Got some office equipment. It's interesting, they've got a 3D printer, VJet, in the office equipment category. Oil and gas is, slightly positive. Industrial goods, very negative. Global. Telecom, generally negative. Hardware, software, generally negative. Retailing, a little negative. Not a whole lot of positivity, a little bit in oil and gas. Look at the best performing ETFs for the market. So which way are they pointing right now for the market? So down on the NASDAQ. So that's the biggest top performer right now is down on the NASDAQ. Short on China. Short on small cap. Short the Russell. So again, the Dow, short Dow, short S&P, short mid caps, short small caps. So everything pretty much down. Russell. Short the Russell. Short China. I think Easy Mike was mentioning shorting China. Short Europe. We'll see the DAX and the Euro stocks both took a hit this week as well. VIX. 2x the VIX. It's positive. TIVXF. That looks like a over-the-counter. UVXY is the one we generally use for logging the VIX. Here's a midterm, so pointing up on volatility. So again, down NASDAQ. Industry-wide, mostly red again from Friday. Yeah, very, very little positivity from Friday. So transport's a little positive. Transport, supply chain, a little bit of pharmaceuticals. Commodities, so shipping, gold and silver, we talked about silver. So you can see the positive sentiment in silver right now. Shipping and silver. Asia preferred 3 to 7s, and positive Swiss franc, euro, Canadian dollar, negative pound, and Japanese yen. And we'll see that in a second in the futures. So we'll jump over to the futures in FinBiz. So again, we see these downtrends. Pretty much all the indices looks like, they're all downtrending, potentially going to test the previous low. And then, we'll see if it breaks that previous low. Then, we've got some significant downside. If that previous low holds, I would personally expect, a little bit of a bounce. I think we'll get significant support at that previous low. As again, the seasonal trend is up. As we covered in Making Money Trading in the fall, also in October. So I think we'll get a bounce testing that previous low. But then if it, depending on the overall global situation and sentiment, if that low breaks, we might be in for a downslide for a little while. Again, we see that drop in the Euro stocks and the DAX. See downtrending, we see how the Russell's broken down below. In terms of the futures, broken down below the previous low. Nikkei coming down to its previous low. We saw that surge of oil up to 90. Again, resistance at 90, support at 85. So I think we'll get a little bit of rejection and retesting that 90. If it breaks that 90, then we'll go and retest 95. And again, the trend is up given the instability in the Middle East. And we saw natural gas went all the way up to 340, broke briefly above 340, rejected, did break down below 3, probably retest that low at 280, probably then bounce back and retest the resistance at 3. So a lot of volatility in natural gas. Again, opportunities for short-term swings, short-term scalp trades, and we'll talk about those ETFs. I know several of our BeachBum traders do trade, long natural gas boil, short cold, long oil with gush or a UCO, short with drip or SCO. So again, a lot of volatility. So short-term trading opportunities. See these big bounces in gold and silver. So it looks like, almost a V bounce in gold, briefly broke above 2,000, rejected. Now it's, it's probably going to continue to retest that 2,000 until it can break and hold 2,000. But you can see a strong uptrend in gold and silver. Again, silver didn't quite retest 24, probably will retest 24, and then, work on breaking that 24 level, which, is previous high. But again, strong uptrends in gold and silver. Platinum pretty flat, palladium going down, copper testing its bottoms, corn on an upswing, wheat also looks like it's trying to upswing, and we'll talk about our trades in wheat tomorrow. And then we see that, steep decline in the prices of bonds until we got a little bit of a bounce on Friday when they retreated, the 30-year retreated below, and the 10-year a little bit below 5%. But again, strong downward trend in bonds. Dollar's been pretty stable, right below, right around 106. So it looks like we might have gotten some stability in the U.S. dollar. And so we're seeing more oscillation in some of the component currencies. Yen's very weak. Canadian dollar's pretty weak. Pound's pretty weak. But the euro's been sitting, 105, 106. Swiss franc bounced up. And the Aussie and Kiwi dollars pretty weak. Alan Kratz says, I see a pullback in silver. I wouldn't disagree given some of these moves. I think we'll get some short-term pullbacks, and then, possibly, like we saw here, we see there's a little stabilization, a little bit of a retracement, and then a push back up. Similarly with gold. So again, with these, gap up moves, I wouldn't disagree that we could get a short-term pullback, and then I think we'll continue on the longer term upward trend. So I hope that helps. Okay, I want to come back to our ETFs. I want to talk about our strategies on how to skate to where the market is going, and some themes, some ideas. Again, none of this should be considered financial advice. We're not financial advisors. So this is all of our content is for education and entertainment purposes only. But again, these are some strategies, some trade ideas of some trends, seasonal trends that I want to quickly look at that maybe we can take advantage of. Maybe we can skate to where the market's going, take advantage of these seasonal trends, some of which we've talked about before, some might be slightly new. Again, so we can take advantage and get there before the market gets there and make money trading in this way. So let me grab a quick drink, and I want to look at some of these seasonal trends in some of these categories. Okay, the first one I want to look at that we've talked about when we talked about the making money trading in the fall in October, we talked about this some is the trend in retail tends to be positive. So I want to look at the XRT chart, and we see this seasonal trend October through the end of the year. See back here as well, October through the end of the year. So again, seasonally, it seems to, it tends to be positive for retail going into the end of the year. And then we see, a rollover at the end of the year. So again, right now we have this opportunity to take advantage of the seasonal trend in retail up until the end of the year. And then it'd probably be a good idea to, to sell at that point, because it seems to peak out in early of each year. And we'll see this in a number of these trends. So again, retail is a positive trend October through the end of the year. We looked at silver and gold. If we look at the trends for silver, again, we tend to see towards the end of the year, we see an uptrend into the early part of the year, and that continues. So here we saw one, September, November. So it looks like, November through early part of the following year, we get a nice uptrend. So again, we might get a little bit of a retracement, and then again, November through early next year, we might, continue those uptrends in silver and gold. So gold is very similar. Again, you can get these charts via the direct links in our notes. I won't talk too much about the gold and silver ETFs. Again, we do have a video, and you can listen to that video on the top gold and silver ETFs. Also, something to note, I've noticed that the small gold and silver miners, which have been severely beaten down, they've been lagging. They really haven't uptrended along with the price in gold and silver, but I see several of them are starting to slowly move up. So you might want to take a look at the small gold and silver miners that you like, that you think are valuable, and find the ones that might be starting to move back up. The risk reward profile is probably pretty good in quite a few of these, because they have been severely beaten down over the past couple of years. Quite a few of them are very cheap. They're a buck, couple, some even under $1. Although a lot of these small miners also are not they're not vulnerable to the minimum bid price issue. They've been grandfathered in, so take a look at those. Also, someone was mentioning the IWM. I think seasonally we'll see another trend in the IWM. So here we see October through the end of the year. IWM tends to have an uptrend. And then we'll talk about tax loss harvesting, etc. So again, October through the end of the year tends to be positive, has been positive the past couple of years for IWM. So if we see that turn in IWM, if it does start to swing back up, that may be, again, another opportunity for a short-term swing. But right now, it's downtrending pretty severely. So again, we want to see that stabilization. We want to see that bottoming and swinging back up before we jump into too aggressively. Also, we've been talking about treasuries. Again, treasury prices have been plummeting, yields have been escalating, and when that turns, that has an effect on several of the other sectors we want to talk about, but it's all driven by that treasury yields. Again, we have a supply problem. Treasury keeps issuing yields, so the prices keep dropping, yields keep going up. So we want to, wait for that turn. Once we get that turn in the TLT, and again, you can look at the seasonal link, and we've talked about this for quite some time. Again, right now that's putting pressure on real estate, putting pressure on utilities, and we want to see once that does stop, once treasury yields peak out, become stable, then that may be an opportunity for real estate and utilities. Again, we talked about the seasonal trend in utilities. So you can reference those previous discussions via the links to those videos in the notes. Also, we've got a video on the best real estate ETFs to use. And again, we're waiting for treasury yields to stabilize, and then that may be a potential future opportunity in both real estate and utilities. And again, tomorrow we'll talk about some of the individual stocks and ETFs that we're watching regarding these trends. And Easy Mike's asking, what's the dividend on TLT? Tomorrow we'll talk about dividend payers, and we'll specifically look at the various dividend payers related to treasuries, REITs with real estate, utilities, etc. So again, tomorrow we'll talk about dividend payers. As I mentioned, going into the end of the year, you want to be aware of the end of year tax loss harvesting. If you're not familiar with what that is and how does it work, we have a video that talks about tax loss harvesting. Again, that, one area of vulnerability in that regards is beaten down stocks that have significant losses are vulnerable to tax loss harvesting. So when we're talking about IWM, small caps, we're talking about some of the miners. If they're down significantly towards the end of the year, they may be vulnerable to tax loss harvesting. And again, we'll talk about that in more detail as we get towards the end of the year. Talk about wash sales, the Santa rally, etc. towards the end of the year. Again, we've talked about the seasonal trends in the fall, how to make money trading in the fall. We've also talked about October. October tends to be the start of a seasonal uptrend, although again, we've got global situations that are putting pressure on the markets right now, as well as the treasury issue. Okay, so now I'm going to jump back to our ETFs. If anybody in the chat has particular ones you want to look at, categories, indices, commodities, etc., that you want to look at ETFs for, we can do that if you throw that up in the chat. If I missed your comment before, I apologize. And if you put it back up there, we can take a look. Just a quick reminder, If you would like access to this ETF Google Sheet that we use to identify individual ETFs and even some stocks to take advantage of some of these strategies, these ideas, trade ideas that we have, you can get 24/7 access to this Google Sheet, as well as our dividend payers and our puts ROIC Google Sheet by joining our Patreon at the all access or VIP level. Again, we use this. First, we identify the strategy, the trade idea, the category we want to look at. Do we want a long or short? Then we can go to our ETF Google Sheet and identify individual ETFs, or even, like I said, there's a few individual stocks in here for that category. I know Easy Mike had asked to look at potash, so I will very quickly look at some stocks that we have in here on potash. So again, these are individual stocks. There are no ETFs that we know of related to potash. The one we tend to prefer is IPI. It's also Mosaic. You can see the risk rewards isn't bad for, and I can adjust IPI and put it to the 52-week high so we can compare them a little bit better. So, and I can set that to the 52-week low. Again, we'll see, though, that'll give us a 2.72 on IPI, 1.83 on Mosaic. We just quickly look at the charts on one of these. I'll do it in FinViz. Just a quick reminder, we have all the tools we use frequently in the link section on our homepage, which is beachbumtrading.com, bum without the U, so a quick and easy way to access the tools that we use. So we can see, looks like IPI bounced off that resistance, been downtrending, so it might continue to downtrend, test the previous low. So, I would wait for it to come down further. We look at Mosaic. Similarly, looks like it rejected off its trend line. Looks like it's got a up sloping support level at 34-ish. It's got a down, so it's creating a wedge there, rejecting off that support trend line, but again, generally downtrending. And we'll see if that lower support holds. So I hope that helps. Easy Mike, UAN, he's mentioning as another potential potash play. Oh, that's not a potash, that's an oil. And oh yeah, okay, agricultural inputs, UAN. So very similar to Mosaic. Looks like, again, it peaked and turning down at this point. So I hope that helps. Again, I would be waiting. It looks like they're rolling over and downtrending, so I would be waiting for them to find a support level and swing back up. Retail was one of our topics for skating to where the market is going. So several ETFs you can use to trade retail. So we like this RETL. You can see this is a 3x leveraged on retail in general. You can see it's getting close to its 52-week low. It's not quite, where I would start to watch it. But if you want to play the short-term trend, again, the trend from October to the end of the year for retail is positive. So again, you might use RETL to ride that trend. There's also several others. Clicks is a long online short brick and mortar ETF. ONLN is an online retail ETF. So if you think online is going to outperform brick and mortar significantly, you could use ONLN or Clicks to play the online shopping trend. So we hope that helps. Talked about real estate. Again, we've got a separate video where we talk about longing and shorting real estate. Once we see that, stabilization in TLT and support bottom in DRN, we are watching that trend and looking to play that swing up in real estate using DRN. If you want to short-term trade the volatility, you can use DRV, which is a 3x short, or DRN, which is 3x long. Talked about the oil ETFs. I want to quickly look at the technology components. I thought this was kind of interesting as well. The interesting thing is how well they're adhering to these trends. See, FANG briefly broke above the upper trend line, then declined. Looks like it's just above that lower trend line. And we've got a narrowing channel there. But again, the trend is slightly down. We get a lot of chop. You can trade, the FANGs with FANG-U up, FANG-D short. Biotech extremely weak. So just, pretty much downtrending. The semiconductors broke down below that previous support level. Now we've got a downtrending channel. Looks like it'll test that lower support level. But you can, again, trade volatility in semiconductors with SOXL long, SOXS short. And again, the NASDAQ's bouncing within that channel. So again, short-term trades, you can trade these bounces. It looks like, again, they're adhering quite well to these trend lines in FinViz, showing these channels. So we hope that helps you, identify when to look for the top, short, look for the bottom, long. Again, short-term swings, scalps, etc. And again, you can find that screener on the screeners tab in our ETF Google Sheet as well. Talked about China. It's been pretty volatile, so you can long and short China along with yen, short with Yang. You see Yang had a run on Friday. It's been, again, pretty volatile. Copper's down, but the risk reward from a 52-week standpoint is not terribly attractive with the COPX, so it's still got some downside. Talked about corn. Again, it's getting close. Again, risk reward's not all that great. I've been watching some of these Euro and Europes to see if their risk reward gets attractive. We were talking about TLT, the treasuries. See kind of where they're sitting. They're making new lows. Silver and gold, again, AGQ we prefer for long, CSL for short. So if we do get that retracement, Alan's mentioning, you could scalp short-term trade with ZSL, play the balance with AGQ. Got some miners both for silver and gold. Silver SILJ, JNUG for golds are preferred. There's another JDXJ. Treasuries, we can see TLT's been making new lows. It bounced up a little bit on Friday. You can long treasuries with TMF, short with TMV, or short with TBT. Welcome aboard the Be Free. Thank you for joining us. Again, long volatility, UVXY, EXX. Talked about wheat. So again, wheat bounced up a little bit, rolled over on Friday. We'll talk about that trade. And then we're interested again in catching a swing upward in wheat as well. Also been watching these yen ones. It's been making new bottoms, but again, the risk reward short term isn't all that great. Talked about utilities. Again, we're waiting for that swing in utilities, and then we'd be interested in UTSL. We'll talk about that again tomorrow. So if anybody else in the chat has any other last minute ETFs you want to look at, we've talked about defense with the war. It's, it retraced slightly. Again, if you want to look at any other ETFs, just let me know. Throw it back up in the chat. If I missed it, I apologize. Again, we have a whole bunch of videos in our ETF playlist on how we've constructed this Google Sheet, how you can use it to find ETFs to trade for whatever trade idea strategy that you'd like. Again, tomorrow we'll talk about dividend payers. We'll look at our dividend payer ETFs. We'll talk about constructing a schedule of collecting dividends while we wait for the market to turn, while we wait for some of these swing trades to manifest themselves. So again, once we skate to where the market is going, then we wait for the market to get there. Hopefully we'll get in, ahead of the market and be able to take advantage of the maximum swing from support to, resistance in these various trade ideas. So I looked at potash. We talked about that. Again, if anybody else has any last minute questions or topics you'd like to discuss, please let me know. And we could do that for a couple minutes. Again, we'd also love your feedback on how we can improve our weekly trading game plans, any of our content, our videos, our tools, our Google Sheets, our systems. We'd love to hear how can we add value for all of our fellow BeachBum traders, for our BeachBum trading community. You can put that and any additional questions you might have in the comments to this video below. You can also always ask us in our Discord. Again, our Discord's free to join. We can continue these conversations all the time. Again, that's us, BeachBum Trading, all lowercase, no additional characters or numbers. Looks like we've got some imposters I need to clean up after this live stream. You can also find links to our Discord, our Facebook group, our Reddit community, and also how you can contact us via our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, plenty of ways we can continue these conversations. You can ask us any questions we happen to miss, and we'll try to respond as soon as we're able. Again, we'd like to keep growing our BeachBum trading community, so we hope you'll smash the like button on this video, help the YouTube algorithm share this with more traders around the world. And also we hope you'll share this content with your fellow traders and hopefully help us continue to grow our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So thank you again to everyone that joined us in the chat today. Again, if I missed your question, please put it in the comments, in the Discord, etc. And I'll try to address that as soon as we're able. Otherwise, I hope this all helps. Please let us know what you think of all of this and how we can make improvements. And we hope this will help you skate to where the market is going. And we hope you'll come back again tomorrow, 10 a.m. Eastern, for part 2 of our weekly trading game plan, where we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, our shopping list, how to maintain our shopping list. And also we'll look at dividend payers, and we'll talk about additional option strategies to generate income. So again, we hope we'll see you again 10 a.m. tomorrow for part 2 of our weekly trading game plan for the trading week of October 23rd through October 27th. Thank you again for watching and participating, and have a great day.